today's special live stream event, a deep dive into Lemonade. We are going to peel things back and see if the company indeed looks sweet or if it looks sour. My name is Seven Investing. I'm Seven Investing founder and CEO Simon Erickson. Excited to get started here in just a few minutes. We're going to be posting this as we speak to our social media channels. You can follow along at Seven Investing on YouTube or at Seven Innovator on Twitter. So we're going to go ahead and get that posted right now. We are now live. Here we go. Bear with me one more moment as we pass this through the social media channels that be. And we're going to get started in exactly 60 seconds as a deep dive into Lemonade. Here we are. Perfect. Okay, great. Thanks very much again for everyone joining live on the live stream event. This is Seven Investing's deep dive into Lemonade. We're going to go ahead and get started here. I've got a presentation to share with you all. It's also an interactive event, so we're going to be sharing some things in the live chat on the right-hand side. Please feel free, as you'd like, to go ahead and comment within that. Please be respectful of others who might have different opinions than yours on any of the stocks that we're discussing. We're also going to go through and have a Q&A session as well as a discussion with myself and with other investors as well. So live chat is open on the right-hand side. Let's jump into a couple of the other things housekeeping-wise before we get started. First of all, I anticipate one of the questions that's going to be asked is, Simon, can I get a copy of this presentation emailed out to me? Yes, you certainly can. And in fact, the easiest way to do that is to just join our 7investing email list. You can do that at 7investing.com/newsletter. And just put in your first name and your email address and we'll send it directly to you. In fact, I'll make it even easier for you. You can just click on this link at the bottom of the screen, 7investing.com/newsletter. Not only the slides for the 7 Investing exclusive on Lemonade here today, but also our investing insights to see really what's going on. We'd like to cast a wide net. We'd like to look at a large number of companies that we can assess when we're looking for our next investing opportunities. In fact, if you'd like to take the next step where you say, hey, this is great. I enjoy seeing these updates from you, but I'd really like to start asking questions about these companies too. I'd like to go out there and maybe Lemonade's a company that you're following, you're thinking about investing in it, and you'd like to start asking some questions with other investors. We took the next step and made a resource available called the 7 Investing Community Forum. We host it on Discord, and the link for it is right here, which is just to join it. It's completely free to join. You can get in there and start talking about stocks with other investors. As of this morning, we had 1,451 active users. Typically about 100 are talking at the same time. Right now, we've got 86, but it's kind of a great way to start asking questions, bouncing ideas off each other, safe environment, free from social media trolls that might hate you for having an opinion that they don't agree with. This is the place where investors can learn together. We really appreciate doing this and creating this community forum. And then the last thing is, if you do say, hey, Simon, this is great. I would like to see your stock recommendations. I appreciate following along with the deep dives that you're hosting. I appreciate, having the back and forth in the community forum. If you are ready to take the next step, we do have the 7 Investing subscription, which is available, where I'm actually giving 1 new recommendation and 5 actionable best buys each and every month. It's $200 a year. It's a very affordable price point. We have very low overhead, but it's also 15 years of investing research professionally that's packaged into what are the very best ideas every month. And then there's the back and forth about them too, not just reading the reports, the interactive on the community forum, the best buys that are actionable and ranked from number 1 to number 5. And we've got a history of returns to back it up. Again, the reason that we do this is because investing is such a long-term journey. It's not just something that you can have a good year and go out there and, pound your chest about how great your returns are and then disappear when things aren't as good. We've been at this for 5 years. We've seen the ups of 2020 and 2021. We saw a much more challenging year in 2022. I think that transparency and credibility are the most important thing in this industry. And so we've got a real-time scorecard. Not only are we making stock recommendations, we've been out there gaining investors' confidence and saving hours of time on the research side of it, but also we've been out there transparently tracking all of the returns of all of our recommendations. 5+ years of the 7 Investing scorecard is outperforming the S&P 500 by 461 basis points. If you look at my scorecard alone, which is just the Simon side of that, we've had several advisors over the years, but mine is also doing quite well. And they're very transparent, not only about the winners, but also about the ones that haven't done so well. I think that investing, to be honest with yourself and credible, is the most important thing that our industry can possibly have. So please check out 7investing.com/subscribe if you're interested in getting started with our service. And so with that said, I'm going to jump back into the presentation here. Let's go to this screen right here. Okay, so we've had Lemonade actually on the 7investing scorecard 4 times. My dear friend Steve Symington, who's one of my favorite people in the whole world, has recommended 4 times, all the way back to the year of its IPO in 2020, shortly after it came public. The stock got a little ahead of itself, as you can see, in those first 2 years, and is at a much more attractive price point today. I think that's what makes it so intriguing to be taking a look at this for this deep dive that we're hosting here today, is because the valuation is much more attractive. I think there's a lot less expectations baked in than there was in 2020 or 2021. So I think this is a really strong buy conviction rating right now. Let's dig a little bit deeper into what we think about the company. Lemonade's motto is to rethink everything you know about insurance. It was founded back in 2015, IPO'd in 2020 at $29 a share, and it was the world's only public benefit corporation in the insurance market. Not typically thought of as a public benefit kind of company for the insurance market that it was in. And it was built basically on a foundation of AI and behavioral economics. As soon as it came public out there, it said its mission was to be a force for public good and to transform insurance from being a necessary evil into a social good, right? Forget everything you thought you knew about insurance. They had a mobile first approach with a low cost acquisition strategy. And so they were going after younger customers, a demographic of people that were under 35 years old. 75% of their customers actually were under 35, and 90% of them were purchasing insurance for the first time. And these were people that necessarily didn't want to have an agent calling them on the phone. They were just fine using an app, going out there and getting a quote, possibly for a policy that they had never had before, and then later on in life for maybe a policy that they had from another vendor or another carrier. The application process was 90 seconds, very, very easy. And then when you had to submit a claim, 30% of them, about a third of claims, were handled instantly using AI. So you don't need to have a long extended period where you're wondering if your claim's getting approved or denied. It's just instantly you provide the information that they need, and they handle it for you very quickly. And so Lemonade offers a variety of different insurance coverages. There is the boring PowerPoint look, and here's a much more user-friendly looking descriptions from their website. They started with renters insurance, maybe a simple policy, maybe just $5 a month, super affordable for most people. Homeowners insurance, if you buy a home and you're not just in an apartment anymore, you might want to protect your items in the home. A little bit more expensive policies as you move on to go into car insurance, maybe later on pet insurance, term life insurance, kind of for every stage of your life that you might need to have insurance coverage for. And of course, they have fun ways of doing this, right? There's a company that is built in the digital age. It's active in social media. It's got Instagram posts that are fun. It's showing pictures of the items, whatever they might be, that people are protecting for renters and homeowners insurance, showing you how much money you can save to go buy more things within your home. You've got the guy in the middle here who's very excited about their car insurance. And with pet insurance, they actually have different animals with different personalities based on their zodiac signs. I promise I'll get to more of those in just a minute. But again, a really fun digital company, very low cost of acquisition because a lot of it's on social media or digital channels. Shai Wininger is on the left-hand side and Daniel Schreiber on the right. These are the co-founders of the company back in 2015, a decade ago. They're still very actively involved. There's Shai on the left. There's Daniel on the right, who are the president and CEO respectively. And as promised, a couple more animal personalities based on the zodiac signs of animals that are covered by Lemonade's health insurance. Okay, funny business aside, let's get into the investing side. Let's look at the fundamentals and the profitability of this business. There's a wide variety of metrics that get reported by Lemonade. And let's start at the top. Let's start, first of all, just with top line growth in terms of customers, in terms of the premiums they're collecting, and in terms of the premium per customer that they're collecting out there. First of all, this is very good. It's very easy to switch from an existing policy that you have out there. They go out there right on their own site and say, hey, do you already have Allstate? Do you already have Farmers? Do you already have Liberty Mutual or Travelers or any one of these other large insurance companies? If you do, really quickly, just use our app to check our prices and very, very quickly switch to using Lemonade as your insurance provider instead. And you might save a lot of money. A lot of insurance companies are doing this. A lot of it's you have to call a number, you have to speak with an agent, they have to write a policy. This is something that can be done in 90 seconds online or within the app. And so again, you can see that from the price points that they have for a wide variety of coverages, affordable pricing, very, very easy to use, user-friendly app and an interface that works for a lot of the younger demographic. And it's worked very well for top line growth. Consumer focused insurance has a total addressable market globally of $5 trillion. Yet most of it is dominated by a small number of players, right? These are the incumbents that have just got an army of insurance brokers. They spend a lot of time on the telephones. You've got a lot of agents that are looking to develop those policies and then get you to re sign those policies over time. Now that's great. It's a profitable business. That's why insurance has been around for so many centuries, but it also has its own limitations, right? There's high overhead costs associated with this. It's based upon personal relationships. And so a lot of these companies don't want to go out there and disrupt themselves. They don't want their customers to switch from that in-person interaction to say, hey, use the AI interface we've built instead. So they're really kind of hesitant to bring a lot of the things that Lemonade is doing well into their existing operations. And because there's an underserved minority of the market that is interested in these types of things, it leaves the door wide open for Lemonade to disrupt the industry. And that's why you can see the customer growth up 21%, the premiums per customer rising steadily, and then the in-force premiums, which are the active policies that have already been paid, not only growing at 20% plus rates, but increasing. In fact, if you look at the chart at the bottom, the number of in-force premiums have grown at a year-over-year growth rate that has accelerated for 6 consecutive quarters. And Lemonade now has 2.5 million total customers. A couple other top line growth metrics worth paying attention to. You can see the gross earned premiums. You can see the revenue they're deriving from that. And then, of course, the premiums and the customer count that we just discussed. So I think that the fundamentals look really, really good. First of all, they've recently surpassed $1 billion of in-force premiums. We now have a business that's getting to scale. They've got total revenue in fiscal 2024 that was growing at 22% over year to 526 million. They're guiding for that to accelerate even further to 26% growth to 662 million in fiscal 2025. And they're also on an adjusted basis, generating positive free cash flow when you back out the borrowings that they have to have for the financing agreement with other partners. We'll talk about General Catalyst and their marketing approach here in a moment. But I think it's important to realize the top line itself is growing very well. But for anyone who's invested in insurance knows top line growth isn't everything. Yes, this is a massive market. Yes, it was 11% of America's GDP last year. Yes, they're growing revenue and premiums at 20% annually. But even more important than any of those is that disciplined underwriting is very important in the insurance industry. You can go out there and price policies at anything you want to and probably grow the top line very quickly. But if your business blows up or you're not profitable, you're soon to go out of business. And so insurance, really the underwriting is super important, especially for new policies that don't have direct competition. And so in addition to looking at the top line growth, there's some other first quarter results that I think investors should be paying more attention to. We'll get into each of these in a moment, but I just put a mental note in your mind right now that these are important, that we're not only looking at the total number of new customers that added, the total number of premiums and the average premium per customer, but also the retention rate of those customers. 84% annual dollar retention, which has actually been declining a little bit within the last couple of years and quarters. Not necessarily a bad thing, but it's lower than the 87% that we saw back in 2023. You've got a 30% adjusted gross profit margin related to the policies that are written out there. That does not include operating costs or operating overhead. And then they've got a growth spend that they spend of about $38 million in sales and marketing. We're going to get into the nitty gritty of the numbers in just a moment here. Put the mental note, though, that these are important because you want to look at the profitability of the business rather than just the top line growth. But a couple stream of consciousness investing insights here. First and foremost about the fundamentals and profitability. Lemonade's fundamentals are incredible. They're growing very, very quickly on the top line. They've got about an industry average for retention rate. 84% sounds really good. That's actually about average for the insurance industry. There's a lot of stickiness here. People don't like to break their existing policies. So even the traditional players are typically used to 85% plus on retention rates. The gross loss ratio, which we'll define all of these terms in a moment, but this is basically the claims that you're paying out divided by the premiums for the policies related to those claims, of 73% is still very high compared to a lot of Lemonade's peers, especially the traditional peers that have more mature business lines. Less than 60% is typically a good gross loss ratio, and Lemonade's is at 73%, but there's some nuance to that number too, which we'll get into a moment. It's also becoming much improved. It's going down in a good way. You want to see the gross loss ratio decline over time. As the company is becoming more disciplined and collecting more data, it's improving its underwriting. In fact, its gross loss ratio was over 90% just 2 years ago in 2023. And again, the entire insurance industry as a whole is based upon disciplined underwriting, and the companies who prioritize growth over strictly discipline of the underwriting don't last long and they eventually blow up. I think that that combined with the fact that the insurance industry is heavily regulated is kind of why this is an industry that's been hard to disrupt in the past. It's been one that has been traditionally kind of slow moving purposely because of a lot of the fundamental reasons associated with it. But again, Lemonade is still a very, very young company. It was founded a decade ago. The previous decade was really about growth and collecting data and understanding how these markets that they're participating in work. They got in early with kind of lower risk markets, renters insurance, home insurance. Now they're kind of getting into bigger things like pet insurance and auto insurance, and even life term policies. I think the next decade is going to be less about that top line growth, which we've seen accelerating for the last 6 quarters, 27% here expected in 2025. But it's going to be more about the disciplined underwriting and the retention of the customers that they want to keep, right? So I think that within a couple of years, perhaps 5 years, perhaps even less than that, I'm watching for Lemonade's growth rates to slow down. I think that its total premiums collected, its total customer count is going to be probably in the mid-teens, maybe 15%, but its retention rates are going to increase from about 84, 86% to 90% plus, and its gross loss ratios showing the efficiency of the business to be less than 60%. And again, that's because this is built upon AI as a foundation, and I think this transition will be incredibly profitable for its shareholders. So let's look a little bit closer at the loss ratios themselves. I want to look a little bit at why this is so important. First of all, the gross loss ratio, again, is the total number of claims and the associated expenses related to those claims divided by the premiums for the policies that you collected. You can see it's steadily declining, right? From the first quarter of 2025 all the way to the fourth quarter of 2024, steadily going down as we would expect that it would as the company gets better and better about its own business. But look at the gross loss ratio increasing to 78% in the first quarter of 2025. And this is something that was not just across the board an increase. You can see specifically it was for homeowners. Multi-peril was the gross loss ratio that increased from 55% in the previous quarter, fourth quarter of 2024, to 82% in the first quarter of 2025. Now, there's a little bit of nuance to this number. It's not like Lemonade all of a sudden its business just blew up, but we had a catastrophic event that happened in the first quarter that caused us to increase. In fact, if you look at that gross loss ratio, excluding catastrophic events, which would be the same things, but excluding ones that are over a certain threshold of monetary payouts that was required for them, it was actually steadily improving from 62% to 59%. And of course, the catastrophic event that we had in the first quarter of 25, which specifically impacted homeowners, was the California wildfires, right? Anyone who's followed this tragic event knows all of the damage that was done, specifically in the Los Angeles and even San Diego area. More than 12,000 buildings completely destroyed, over $300 billion in damages to buildings, not only for businesses, but also for homeowners. A very, very difficult event to go through. Now, as an insurer, you don't get to just ignore catastrophic events. This is kind of the important part of insurance. You have insurance so that when stuff like this happens, you have someone like Lemonade that's going to be there for you and, make you whole. If your home is destroyed or your items are destroyed, you don't want to have a whole lot of haggling back and forth with them about what you're going to get out of the policy. You want them to be there for whatever the policy states and basically have them have that big payout. So I think it's important. You don't just get to ignore that, but it's also worth recognizing that extreme events like this don't happen every day or every month or even every year. That's why they're considered extreme events. That's why you can see these fluctuations on a quarter-to-quarter basis. And so there's always nuance when you look at the gross loss ratio. Always kind of look at that catastrophic events, figure out what's going on. Specifically for this last year was the California wildfires of the first quarter, which really impacted the insurance business as a whole. A little bit more insight into this, Lemonade comes out there and says exactly that this was going to impact their gross losses, their adjusted EBITDA in the first quarter, and they were going to be increasing their policy pricing in this market because they consider it to be very high risk. In fact, they go on, they say they're probably going to be non-renewing a lot of the homeowners policies and the renters policy that they had in the California market. Is that going to reduce top line growth? Yes. Is that going to reduce the total number of premiums that they're collecting? Yes. But is that also going to be a profitable business decision that leads to disciplined underwriting? Yes, and yes as well. And so that's why I think we're going to see this growth slow down just a little bit. as Lemonade kind of figures out which markets does it want to participate in. It doesn't want to go out there and raise its rates incredibly high in California. It certainly was there for the people that needed it this last quarter, but I think it's going to be much more disciplined on which markets it wants to participate in. Okay, great. So at this point, I'm going to jump back into the live stream. I'm going to pull myself away from the slides that I've been presenting here, and I'd like to invite my friend Emmett Savage to come onto the stage with me. Emmett is the CEO of Profit. We've got a partnership with them that 7 Investing is very excited about. And I'm going to let him speak for just a moment about his business and how he's using AI, not in the insurance industry like Lemonade is, but actually in the investing industry through a new partnership that he's got there with Profit. Emmett, are you there? And can you request the sharing of the stage here and the microphone so I can hand it over to you and we can talk a little bit just about Profit. I'll pause for a few moments as we get all of the details worked out here on how to share speakers. In the meantime, if you have questions or you'd like to add something to the live chat, please do so as well. Going to go ahead and keep this up and running. Emmett, if you're there, my friend, please go ahead and request access to speak. If not, the live chat would be wonderful too. If not, I might just keep going and talk for a moment about Profit AI. Oh, there we go. Emmett, I see that you are requesting, and let's see if we can get you in here.
Hi, Simon. How you doing?
Oh, perfect. Emmett, I can hear you, and your video is working. Excellent. I will hand the mic to you as I go grab a lemonade.
Oh, great. Actually, good one. So look, Simon, you go have the lemonade. I'm a shareholder in Lemonade, and I totally enjoyed your presentation so far. And it's an absolute privilege for me to be here. I've been a fan of yours for years and a subscriber to 7 Investing from the outset. However, since you founded 7 Investing, and I founded my Wall Street over here in Dublin, in Ireland, the stock investing world has undergone a complete transformation, as you and I know only too well. And that's kind of driven by zero commission stockbrokers, which are now accessible to everyone everywhere. And more importantly, more and more noise in the space in which you and I exist. I know you and you know me, and we live because we are so sorry. Our passion is in finding quality businesses at the right price. And ultimately, while there's great analysts out there like you, there's a lot of noise out there, and the quality that you deliver day in, day out has actually, it's starting to get drowned out by an ocean of mediocre opinions. And let me just explain what I mean. For example, there's about 50 billion about 50 billion tweets related to stock investing. And that's just like one example from one platform. There's about 500 investing newsletters on Substack, some with many hundreds of thousands of subscribers. So there's millions of opinions, there's thousands of strategies, and there's probably hundreds of zero commission stockbrokers. And I've watched it happen, as have you. And we've built our companies as that noise level went up and up and up. And I think you and I have seen what people truly need, which is in just basically simple terms, to beat the market. That's what people need, and that's what people want, and that's why you've attracted an audience, and my Wall Street has attracted an audience. But first and foremost, I reached out to you, as you well know, a couple of weeks ago, because after 16 years, we launched a product. My Wall Street launched a product called Profit, Prophet. And it's been 16 years in development, as I said, and its average annual return in real time, we haven't back tested anything, we've real tested everything, is 21.6% for 16 years. And this is, as I said, the result of a lot of development. It's powered by NVIDIA chips on a rack space. But for users of this particular product, it only takes 5 minutes a month. So if I may, I'm just going to rewind a tiny bit and just explain, well, what is it? Well, basically back in 2005, my co-founder and our partners started to codify all the investing books that you and I have internalized and lived our research lives by. And there was 24 books that we codified and a couple of white papers. And what I mean by codified is we sat down and we looked at One Up on Wall Street by Peter Lynch and codified the method that he espouses in that book. We looked at The Intelligent Investor by Ben Graham and the Motley Fool Investment Guide and Shareholder Yield, and every book that had a methodology codifiable, we codified it 16 years ago. And as I said, a couple of academic white papers. And lo and behold, a few years later, we'll call it last October, one of those methods had absolutely trounced all the others. So we tweaked it a little bit, and the acceleration of data processing, thanks to NVIDIA and friends, allowed us to really put an edge on this product. So I am absolutely delighted to collaborate with you to offer your members a 60-day free trial of Profit. It does not compete with what you do and what I do day in, day out, because it speaks to people who are like, just tell me what to buy. Now, your core audience and my core audience, and my Wall Street's core audience, love the sport of investing. They love Lemonade. As it happens, I pitched Lemonade as well in the service that I run. And you and I love the storyboard, and we love considering it. And you and I have had a good chat about the Blue Ocean strategy, which we both have on our shelves. And Profit was built with the Blue Ocean strategy in mind. And it's very simple. And before I shut up and let you speak, I'll just tell you that all you do at Profit is you start with an equal dollar amount of 10 stocks. Then on the fourth Friday, you basically are told which ones to sell, take the cash and put it into the new ones. So it kind of maybe 2 or 3 sells that corresponds to 2 or 3 buys, and you just do that once a month. And the result is a system that has returned an average of 21.6% per year. And if I may, I'll just tell you one last thing about the last 16 years. 8 of those 16 years, the method was up at least 20%. 5 of those years, it was up at least 30%. And 3 of those years, it was up 45%. And only 2 of the 16 years, it was down. And I just mean barely low single digits below zero. So we have developed a beautiful system that is for those people who don't love the sport as much as you and me and our core listeners.
Perfectly stated, Emmett. Thank you very much. As I would like to tell everybody, I'm pretty darn selective and I vet pretty thoroughly all of the partners that 7investing wants to work with. I've known Emmett for at least 5 years. I like what he's developed. I've checked out the site myself. I'm very confident pitching it here within my own presentation. So thank you, Emmett. Thanks very much. For everyone who's following along, use profit.com/7investing. Again, what a deal. What a deal Emmett has agreed to offer our 7investing audience. You get not 1, but 2 months free and $50 off their annual rate. It's a perfect solution if you just want to see, some buys and some sells every month. It's kind of a great 1-2 punch with that and 7investing. Emmett, I hope you have a great evening. I know that you're calling in from Ireland. I appreciate you kind of giving us a heads up of the great stuff you're working on with Profit out there.
Thanks, Simon. Great to see you. Thanks, everyone.
All right, and let's jump back into Lemonade now. Let's go to part 2 here. Emmett, I'm going to go ahead and take back the mic from you, and we're going to jump into the marketing and valuation piece of Lemonade and why it's so interesting, why it's so different, and also specifically what metrics should we be looking for as investors. So jumping right along here, let me pull this back up one moment. Here we go. So let's talk about marketing at Lemonade as the next step here. Lemonade is a very profitable business, just like all insurance companies are. But just like other insurance companies, it needs to acquire new customers. And it uses that by spending sales and marketing to go out there and get people in the door. And this is one of the key reasons why the company is still reporting a net loss and adjusted EBITDA that is negative right now because of its sales and marketing expense. But it's also doing it in a very methodical way that's very good for long-term shareholders and also very good for the business itself. So I'm going to walk a little bit down memory lane here of some of the things you said not too long ago in the 7investing community forum. That same community forum I was pitching earlier in this presentation, we had some insights in there about Lemonade back then as well. Specifically what I said back then was it was a lifetime value to customer acquisition cost ratio that Lemonade was displaying of 3x which is slightly lower now this first quarter because it's closer to 2.2x because of the California wildfires, but still very, very good for a software company. Um, it reminded me of a similar situation for a company called Viva Systems in 2019. This was also a software company that was using technology to disrupt a pretty stodgy and conservative business, which was healthcare and drug development, which was basically being done on paperwork that they moved into the cloud. And at the time that Viva Systems was showing a similar LTV to customer acquisition cost ratio, the stock then went on to more than double during the following 12 months. And so, just briefly walking through what we did, this is kind of some of the nuance that I love to do as an investing researcher. I don't need to share every single line item of the models that I built, but the important thing to see was that Viva's customer acquisition costs were significantly lower than its net customer lifetime revenue it was deriving. It was spending significantly less to get people in the door as it was collecting lifetime value from them over time. And in fact, its LTV to customer acquisition cost at the time, back in 2019, was about 2.4x. And Viva Systems stock did very well in the 18 months after that, up 136% over those 18 months. And if you zoom out even farther for the past 10 years, where it similarly had very, very good lifetime value to acquisition cost ratios, it's been an 8-bagger over the past decade, over 700% return from the starting price back in 2015. Viva Systems, again, this is an analog to what I see with Lemonade today. I think that one of the reasons that Lemonade is so attractive and is showing an LTV to customer acquisition cost of 2.2x now is due to its partnership with General Catalyst. What it's done is it's offloaded the costs of its marketing to a partner and is only paying it for the policies that it's writing. So it's on General Catalyst to go out there and put the money to work in a financially attractive way. Now, what Lemonade is doing is it's creating synthetic agents which control the entire customer experience from the very first advertisement you might see for a Lemonade ad on your cell phone to the moment that a policy is actually written. We call these synthetic agents because they're not human being agents. It's the same kind of things that a human being insurance agent would do when they call you. You talk about the pricing, you talk about the quote that you want to create, you want to ask what the pricing escalators you might look like would be. All the questions you would ask a human being agent is now handled in a synthetic agent that Lemonade is using for its marketing. And of course, very, very efficient because it's not putting all of the bill up front from its own balance sheet for its acquisition costs. It's a win-win because Lemonade's cash requirements are at a minimum for marketing, and General Catalyst has a very high margin and profitable relationship with the insurance company. So let's go back to what we discussed about Viva Systems. When we saw that Viva had a 2.4x lifetime value to customer acquisition cost ratio, remember I said to make a mental note of some of those results that we saw from Lemonade. We can now use that to see how profitable is this business and how does it compare to other software companies, not necessarily insurance companies, but software companies that have been similarly profitable in the past. So we've got some good data points here from the first quarter. Lemonade added 115,000 new customers. The average premium per customer was $396 for a one-year premium, typically for all of its policies. It has a gross loss ratio of 73%, but more importantly, its annual dollar retention rate was 84%, meaning that they're churning about 16% by dollars of the business that they had every year. It has an adjusted gross profit margin of 30% on those premium policies, and it spent $38 million on sales and marketing for its growth spend. So, okay, let's get into the trenches here and do some investing homework. A customer lifetime value is the average premium paid by a customer times the gross profit margin, not the overhead of the business, not the marketing of the business, but just at the gross level, what kind of profit are you getting per customer, divided by the churn rate. And so if we take the numbers, we work them out, we see that the average customer of Lemonade's is generating a lifetime value of around $742. That's pretty good, actually. Now, if we look at the acquisition side of this, we look at the sales and marketing growth spend. What did they spend on attracting those 115,000 new customers that they added this quarter? And on a per customer basis, their customer acquisition cost was around $330. And so if you divide the two, 742 for a lifetime value, divided by the $330 to acquire those customers, you've got an LTV to acquisition cost ratio of about 2.24. Looks a lot like we just saw for Viva Systems. Now, I'm not saying they're going to be exactly the same. These are different industries, and there's a lot of different nuances But generally, when you're looking at software companies with low and efficient acquisition strategies, things like the LTV to CAC are important metrics to be keeping an eye on. A couple other things about the valuation as I start to wrap this up. Lemonade stock price right now at $32.66 has a current market cap of $2.4 billion. It's currently priced at a price to book value of 4x, which compared to other insurance companies is very expensive. In fact, it's nearly double the valuation multiple that we'd see from more traditional publicly traded insurers. But again, these companies are growing much slower and they're much less efficient than what Lemonade is doing. Lemonade is learning quicker from the data and from the AI that it's using for its operations. In addition to that, it looks much more like a software company, in my opinion, than it does for a traditional insurer. And that goes all the way back to its Israeli founders who built this to be a software technology company, not with the preconceived biases of being insurance insiders. Wall Street itself thinks that the shares are worth $30. That's according to the consensus price target of the 8 analysts that are following it from an institutional perspective. I suggest that the shares today at $32 are pretty fairly valued. But there are several takes out there in the investing community, specifically on social media or investing blogs, where I frequent at 2 in the morning when I can't sleep, that are saying that Wall Street is undervaluing Lemonade's business, specifically for its growth rates and the improvements in the operating leverage, where its margins are going to improve over time because of more disciplined underwriting. Some people are thinking the shares are worth more than $100 per share. But again, beauty is in the eye of the beholder. Each of us is free to make our own opinions. I personally think that Lemonade is a very attractively priced stock right now. Even though it's up 100% during the last 12 months, it's still largely unchanged from its $29 per share value that it was at in its IPO in July of 2020. Now, the stock probably got ahead of itself on the left-hand side there, right? When it was at $150 a share, everyone thought it was going to completely disrupt the industry. I think we've gone through the trial of disillusionment, as Emmett and I were talking about, from some of the good books that we've read over the years. This one from the Innovator's Dilemma, where it kind of as capsized and hit a bottom. And I think it's much more attractively priced, but we're seeing a return to fundamental growth that is, in my opinion, a little bit out of touch with the valuation. A couple other investing insights, this time for technical analysis. Things worth pointing out is that 28% short interest of the free float for Lemonade share. That means that of the free float of the shares that are available on the exchanges, not locked up by insiders or the ones that have to hold on to their shares, 28% of them are being sold short, meaning they're being borrowed by people that are expecting the price of the shares to decrease over time. And then 8.5 days to cover, that's the total number of short interest shares out there divided by the average daily volume. 8.5 days is very, very high. I would consider anything over 5 days to cover, meaning it would take 5 full trading days to cover all of the short positions that a stock has. I think that's very, very high. And both of these could be bullish indicators because it just shows that there's just a lot of short pressure that's weighing on the stock price right now. Keep in mind, this is a company that's still reporting not only 20% growth rates, but accelerating growth and is improving its profitability from a fundamental perspective. So to recap several of the things that we've discussed here, before I kind of open it up to see if anyone else has any comments they'd like to make, I see Lemonade as having profitable top-line growth and improving fundamentals. It is a consumer-focused industry that's worth $5 trillion globally. Disciplined underwriting, of course, is very important. We've got strong and improving fundamentals as well as unit economics on a per-customer basis. You've got a profitable, methodical marketing strategy with a partner that they have on board. You have inherent operating leverage as you get smarter about the data that you're collecting, and financial discipline to make sure that the balance sheet does not get overly exposed to an industry that can blow other players up. I am confident in Lemonade's future as a long-term investment opportunity. I think this might be one worth taking a second look at if you are interested in the shares here today. So once again, one final reminder, if you would like to have this presentation emailed to you, 7investing.com/newsletter. That's where you can sign up to get all of our investing insights, including this presentation about Lemonade. So with that in mind, I'm going to bring it back here. Final thoughts. See if anybody else has any comments in the chat that they'd like to say about Lemonade. Jake says, Lemonade is easy money. Jake, I appreciate the comment. I agree. I think it's a good opportunity we should be taking a closer look at. Now that we peel it back, I think maybe it looks a little bit more sweet than it does sour. Wouter writes, Lemonade is all about operating leverage. Though through AI and automation, fixed costs are stable. So the more policies they have, the bigger the economies of scale. This eventually leads to massive profits. Absolutely. Great point. I hope we did justice in hitting that in the presentation to talk about how the profitability of a customer increases over time. And right now, even compared to the acquisition cost of customers, it's even very attractive. Ironic Ape writes, global multi-line is growing more than 2 times and is valued at 6 times books. Looks like the growth rates for global policies, including those like you might be mentioning done in Europe, are growing much faster than the core business. Very, very good points as well as it moves from kind of renters and homeowners insurance to car and pet insurance to international insurance to some faster growth rates that are worth paying attention to as well. So great. I'll leave it open for just a few more minutes. If you have any more comments about Lemonade, please post them in the chat right here. If you would like to jump on the stage, now's your moment to do so. But overall, I think this is a great business. I think we've got great fundamental growth. We've got the same leaders on board that we've always had for the past decade, using AI in a responsible, financially responsible way. And just fundamentally, it's doing things right? It wants to have low cost policies available for people who don't want to pay more for the right to speak with an agent on the phone. I think that they're really doing a lot of good things in the insurance business, using AI to reduce costs and bring value for customers that are interested. So that's a wrap here for 7investing's exclusive live stream event, all about Lemonade. Don't forget, useprofit.com/7investing. Thank you to Emmett and the Profit team for appearing and just this partnership that I'm excited to see where this goes for several more years. Excited to see what they're building over there at Profit. Again, useprofit.com/7investing if you'd like to see what they're working on. And if you would like to take a look at 7investing and see our actual stock recommendations, we make a new recommendation each and every month. We have 5 actionable best buys prioritized from number 1 to number 5 that are published every month as well. You can get started today at 7investing.com/subscribe. No promo code necessary. Your first 7 days are absolutely free. So come check out our best buys here for May, and you'll be just in time to see the newest June recommendation go live next week for June 1st. So excited to publish that one as well. Thanks again for tuning into this live stream event all about Lemonade. I think that the juice is worth the squeeze. This is an interesting company that should be on your radar for long-term investors. Appreciate you. We'll have another live stream event here soon. Have a great week. Have a safe weekend, and we'll talk to you next time.